Welcome to the final video in this series, the trending phase. This is one of the easiest and yet trickiest parts of the cycle. However, today we're going to go over exactly where you should take profit and how. Let's go over to the charts. Hey traders, let's dive in. So one thing that I've noticed is that you want to be taking profits or partial profits at highs or lows within your current time frame. Okay? If you're trading something like the daily, then you have a much longer term view on the market cycle that you're in. Okay, but if you're trading something like the H2 or the H4, you're going to go through many different market cycles. As we can see here, there is 1, 2, 3, 4, 5 complete market cycles. All right. If you're looking at the daily, there could potentially be 2 market cycles or maybe 3 market cycles, right? But we're really trying to squeeze the juice out of every single move that we can, right? So as we can see here, as the markets dived into this H2 area of demand, where is the next logical place for the high to come out of this trade, right? Or to at least take partial profits. So that's just right there, okay? And as we can see, if we look at this from this green box, where that tap was B, we know that that is around 140 pips on that trade. All right, that is not bad at all. All right, not bad at all. So remember, after every trending phase, there is going to be a contraction. Okay, it's just how the story unfolds. And what you should notice is that this is exactly what's happening. There is a story unfolding, and it's your job to read the story. Stay out of the drama, only get in on the action. Stay out of the drama, only get out on the action. The drama is the contraction and the expansion. The action is the trending phase, right? So this is where most of the traders actually lose their money, in this contraction area, this expansion area. Traders think the market's moving down when all the time it's actually moving back up again. Orders are getting liquidated left, right and center just to fuel the banks and institutions buy orders and sell orders, right? So we've got a contraction here, we've got an expansion into this H2 area of demand. Again, this demand area is way too big, potentially would never have taken that, but we can see that the high is there, and if you did trade this zone, there is a potential of 152 pips, right? Awesome stuff. So let's continue. So again, we've got a contraction here, but we have an expansion. But wait, the expansion isn't going into a supply demand zone. All right, so this is another thing that I've noticed with these highs and these lows. The market can also expand into a high or into a low. All right, and when it does do this, again, you want to watch for what's forming after that expansion, right? So as you can see here, if we look to the left, the market expanded into this low. It then formed an H2 area of demand. The market tapped it and then pushed up for a trending phase. All right, so now we're in the trending phase. But if we look at it, this whole move is the trending phase, right? But what's happening within it is that we have mini market cycles within the larger cycle. So if we open this up a little bit more, we can see that we've got contraction, expansion produced an area of H2 demand. Then we've got this area here, the market tapped in, produced a bullish pin bar, but this move up, this long candlestick here, is actually the trending phase. Then we immediately go into the contraction phase. We get a nice little tap on the contraction phase, and then we expand into H2 area of supply. Guys, there is a story unfolding with every candle on the chart. This allows you to map the story. If you understand the story, then you understand what's happening. It allows you to stay out of all the chaos and get in on the good times, right? So as we can see here, we've got the contraction and the expansion into H2, and then we get a massive push to the downside, which is, if we look at the top there, around 300 pips. All right. So where do we take profits off, and why do we know where to take profits off? That's the better question, right? Where do we take profits, and why do we know where to take profits? Because we have an understanding of how we're mapping the story, right? So let's just move this down here for a second. So if we look within this trending phase, we can see right here that we've got an area of contraction, right? So let's just draw that in. Let's just make that contraction phase. Then sorry, that's the wrong one. Let's get this line here, 50%, and draw that through. Perfect. So now that we understand that at this point in the larger cycle of this trending phase, we know we've actually entered a contraction phase as well, right? And it's about to expand, right, into somewhere. Okay, we know it's not an area of supply because we've got nothing but white space down here, right? Well, in this case, like dark space, right? But it is expanding into something. It's expanding into this low, okay? Which means that once this candle breaks it, and we can see we've got a large big break, okay, and a close below this candle, we can pull out at least 60% of our profits, or even 80% of our profits. At this point, I guess I'd probably take off 80% of our profits. But why do we have this area ending here? Because if we look to the left, we can see that this market begins to turn at this next low. Okay, so either here you could potentially take off 60, here you could take off 80, leave your stops just above here and see what the market does from there. Okay, so let's just get rid of that. And let's just play this out, you know, for the sake of it. Forms an area of H2 demand, okay, that holds. The market then aggressively pushes up and then pulls back at this contraction line. See, it's like magic, guys. When you see the market react to your contraction line, you know you're on the right path, okay? That's when you know you're on the right path. So we've got this expansion into this these lows, and that's how we know. That's this what gives us the why. It's like it gives us a deeper understanding of the story. It's like, damn, it's expanding into this low. More than likely, somewhere between these two lows, it's going to start going into the trending phase, right? So it expands here, then we get this trending phase to the upside here. Boom. This is probably not something we could even have gotten because we may not have even have seen it, been there, whatever. But we've got the trending phase now expanded into this area of contraction. So you could, if you wanted to, if you managed to get this, you know, you could start taking off profits at this contraction line. All right. And let's just continue. We can see how the market's just really being steady around that area. And we've got a small area of contraction here, but you can still use the same line. Let's just extend it. And then let's see how the market reacts to this area. Can we see how the market is reacting to that contraction line, guys? Can we just see how it's reacting to it? And then decides to move out. So look, the market just barely closed below this area. If we drew the contraction line here, we could draw a contraction zone. It would probably not have closed with this area. In fact, let's just do it just for the sake of it, right? So got this contraction area here. Let's pull that down there. Pull that there. And let's grab it here. Put that across. Look at that. The market could not close below this contraction line. Could not close. And what does this give us an indication? That this H2 area here was a perfect area to then take a long to the upside. And as we can see, the market then continues up to this area around here. So let's just call this area the H2 zone here. That's fine. And And again, we've got an understanding of what's potentially going to happen inside this zone. In fact, we don't even have to do that. We could literally just extend it. Okay. Now, we have an idea of potentially what's going to happen in this zone, and the market could potentially turn. Why? Because we understand the story. We don't have to draw out every single one up until it gets into this, until it matches, until it goes to this area. Let's just draw out the most recent one. Contraction. Right? Let's draw the line in. Expansion. Okay. And then what eventually happens? Trend. All right. Guys, there is a story unfolding at every point in the market. The master pattern allows you to map that story. Supply and demand zones allow you to play the action in the story. And if you really want to get sort of like nitty gritty, you can play the event chain to get perfect entries that will allow you to open up your position sizes and really take advantage of mapping and the event chain to produce some amazing results. Now, I will be going over the nuances in various different videos at the contraction area, at the expansion area, and the trending area, and in the zones themselves. Because with some of the zones, you don't even have to play the event chain. If you understand the story, what I've noticed on the H2 anyway, there'll probably be different time frames nested within the time frames on other various different time frames, but on H2, sometimes I can just take nested 15-minute zones and it works out perfectly most of the time. Okay. But then there's other times where I'm unsure and I will play the event chain to see if it plays out. But what I've noticed as well is that especially at highs and lows, it's very difficult to play the event chain because the market moves so rapidly and doesn't give you enough data. So trading this, I would not trade anything below the H1 because there will be too much data at the contraction line. You could not draw it out properly and it could give you like wavering results and accuracy. So I would really trade this from the H1 above to make sure that there's not too much data in those contraction and expansion areas and it still keeps your charts clean. I'll see you in the next video, guys.